Hey, it's Isaiah Henry, and today I'm going to show you one of my favorite creative strategies for investing in real estate using a HELOC. How would you like to invest in real estate using no money out of your personal savings? I know, sounds too good to be true, right? Well, my name's Isaiah Henry. I'm the founder of First Position Real Estate and author of The Rookie Real Estate Investor. And today, I'm going to show you how you can use a HELOC to do just that. So when I say the word HELOC, what comes to mind? Probably like this little creature from Star Wars or some complex gizmo taken off the space shuttle. But really, a HELOC simply stands for Home Equity Line of Credit. And I'm going to show you how this simple lending tool can help you do more real estate than you ever imagined. And hey, as I go through this video, if you find it valuable, do me one quick favor. Click that little thumbs up button and of course, subscribe to this channel with that big red button. Alright, so let me explain how a HELOC works and then how you can use one to invest in real estate. And I think the best way for me to explain a HELOC is with an example. Alright, so let's say you own a house, a cute little kitchen, cute bathroom, you have your cute spouse, cute kids, and your really ugly dog. Now let's say you owe the bank 80 grand on that house, but the house has gone up in value. Maybe you just painted recently, so now the house is actually worth more like $200,000. So the difference between what the property is worth and what you owe on the property is known as equity. But normally, in order to access that equity, you have to sell the property, pay the real estate agent, pay the closing costs, blah, 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 blah. And still, you might end up losing like 10% or 20 grand in transaction fees, which would leave you with more like $180,000. But then you got to make sure you pay off the loan, right? The first mortgage that you had on that property initially, which we said was $80,000. Everyone still following? So now we're left with 100 grand to invest. If of course you don't pay taxes, which I know we all do. So more realistically, we have around $80,000 to actually invest. Now let's look at an alternative way to access that equity, a home equity line of credit. A home equity line of credit is added on top of whatever your existing first mortgage is, and it kind of acts like this gigantic credit card you get access to. But you only pay when you're using it, and the interest rates are actually way lower than a typical credit card. Since the rate is usually variable, you can see a little bit of ups and downs with the interest rates, but there's really no cause for major concern there. So if you get a HELOC, now you have quick and easy access to capital when you need it, but you're not paying for it when you're not using it. So how much can you get? Well, this is kind of interesting because some banks will allow you to take 80% of the property's value minus whatever your first mortgage is, of course. Let's walk through the math, and I promise I'll keep it simple. Remember the earlier example we talked about, the house that was worth 200 grand? This means that the bank will lend us 80% of the property's value, which would be $160,000. So again, if your mortgage was $80,000, they're gonna let us take $160K total minus that $80,000 first mortgage. We have now $80,000 that we can pull out on a home equity line of credit. Now, doesn't that $80,000 sound familiar? It should. It's the same amount I mentioned earlier when we talked about the money you would have after actually selling your property. So in other words, you can potentially have the same amount of money left over in cash as if you were selling the property, but you don't actually have to sell it. You can keep the property and now use that $80,000 to invest in your next or first real estate deal. Now, I'm sure we could all find some use for $80,000 when we're looking to invest in real estate, right? Maybe you can use it to buy a lower price blue-collar home in your area. Maybe you can use it as a down payment on a larger multifamily building. Or maybe you can use it as the capital needed to BRRRR your next real estate deal. And of course, for those who don't know, BRRRR stands for buy, renovate, rent, refinance, and repeat. It's a strategy where you find a fixer-upper rental property, buy it with short-term funds like a HELOC, fix it up, and then go back to the bank and get a normal mortgage on the property. paying off the HELOC, and then giving you those short-term funds back. You then get to repeat this process over and over, building your wealth and building your portfolio. I hope you guys really enjoyed this video, and if you did, I hope you guys can do one favor for me. Click that thumbs up button and subscribe to the channel for more real estate investing content. And of course, get your copy of my free ebook, The Rookie Real Estate Investor. I'd love to hop on a call with you guys this week so we can start putting your HELOC to work and get you guys into your next real estate investment deal. Book a call with me today and let's start building generational wealth and a path for early retirement. For First Position Real Estate, my name's Isaiah Henry, signing off.